Welcome to Dr. Fred Markets. This is not financial advice. Every day, the world of finance, crypto, and artificial intelligence moves fast, really fast, and staying informed is the only way to stay ahead. That's exactly what we do here, together. Let's get into today's video.
Sports fans are building better portfolios than you. Signal 1, the two NHL teams are about to draft hundreds of kids. But the real Shark Tank is the Billionaires bidding for the next expansion franchise, where valuations jump from $500 million to $1 billion in a few years. Signal 2, F1 just watched George Russell steal pole in Austria, while Liberty Media quietly turned Formula One from a sleepy Euro hobby into a $20+ billion global media machine, with team values up 5 to 10x in a decade. Signal 3, Taylor Swift doesn't touch stocks on stage, but her tour drops over $1 billion into local economies, and the NFL literally redesigned its broadcast strategy around her, juicing team brand values and media rights in the background. So why are you still buying random meme stocks instead of front-running the next franchise boom? Here's the truth. Sports teams are morphing into bond-like cash machines wrapped in global cult brands, and regular investors are late only because they don't know where to look. Let's dissect the mechanism. Sports revenue has three pillars: media, sponsorship, and Fanatic tax. Media first. The NFL, NBA, NHL, and European football negotiate broadcast deals that lock in multi-year, inflation-protected cash flows. That's why Forbes lists team revenue growing 8 to 12% annually, while TV ratings whine about cord cutting. The leagues sell scarcity, not eyeballs. Now layer today's headlines. The NHL draft is a TV product. It's a commercial for the league's pipeline talent gets picked, ads get sold, expansion bids get justified. Every new media deal bakes in those storylines. Austrian GP? That's the F1 script. Fewer races than you want, scheduled like a global tour. The result, Netflix show, booming US fan base, and team valuations going parabolic. Taylor and Kelsey wedding rumors? That's free global marketing for the NFL and Chiefs. You think front office sports cries about purity. Owners quietly mark up franchise values again. Influence, franchise equity. Next pillar, sponsorship. Brands pay for guaranteed emotion. They want their logo next to your dopamine spikes. Supergirl opens at $18 million on day one. Whether the movie wins or flops, it sells IP. IP fuels merch. Merch is sports' best friend. The line between movie universe and sports universe is dissolving. Superhero nights in arenas, jersey collabs, streaming crossovers. That sponsorship money is why team valuations don't care about last night's score. Third pillar, Fanatic tax. You don't decide to renew Sunday ticket. You don't compare prices. On a playoff ticket, you punch your credit card and pray your spouse forgives you. That irrational loyalty becomes very rational cash. Ticket prices keep outrunning inflation. Concession margins look like SaaS. Licensing prints while you argue on Twitter about who deserved MVP. So, how do you touch this as a normal investor without buying an actual team? First layer, media and rights proxy.
Does what you just heard make you want to dig deeper? Good, because that curiosity is exactly what brought you here, and the second part is going to take it further. Let's go.
Look at the companies that own leagues or broadcast rights. Liberty Media, F1, Disney ESPN, Comcast, regional sports networks, if they aren't already nuked. Run one simple test. Is the sports a growing percentage of their total content value? If yes, you're basically holding a slice of the sports revenue machine. Second layer, publicly traded clubs. A few soccer clubs and specialty entities are listed. They're messy, thinly traded, and run more like royal families than businesses. But they teach you the numbers. Revenue per fan, wage bills, media splits. Treat them as a lab, not a YOLO. Learn the economics before you deploy real money anywhere in this ecosystem. Third layer, picks and shovels. Think ticket platforms, stadium read exposure, sports betting operators, merch licensors. When Taylor drags her fans into NFL broadcasts, who processes that extra betting handle? Which platform taxes every playoff ticket resale? That's your leverage exposure to Fanatic tax without owning the circus. Here's the one concrete thing you didn't know. Sports franchises historically behave more like ultra-liquid dividend growth stocks than lottery tickets. Low default risk, slow but relentless appreciation, and whenever new media tech appears, cable, streaming, sports betting, social, they just raise the toll. Your move in the next 24 hours. Step 1. List every stock in your portfolio that depends on people being rational. Ad tech, disposable apps, trend-chasing nonsense. Step 2. Write down 3 companies that tax irrational obsession, live sports rights, betting, ticketing. Step 3. Over the next month, start rebalancing 5 to 10% of your fund money toward businesses that get richer every time a fan loses their mind over a game, a race, or a rumored wedding. This is not financial advice. This is the blunt truth. You either own a piece of the stadium, or you are the one buying beers in it forever. Subscribe, because tomorrow we dig into another place your emotions secretly pay rent. And let me leave you with one more uncomfortable angle before you click away. Look at your calendar and your brokerage account side by side. Where are you spending your time, and where are you spending your capital? If your evenings are dominated by playoffs, fight nights, race days, or must-see events, but your portfolio is dominated by hype tickers, random tech fads, and story stocks that need perfection to survive, you're not an investor. You're a customer with delusions of ownership. The market has a simple hierarchy: creators of obsession, tolls on obsession, victims of obsession. Fans sit at the bottom. Platforms and rights holders sit at the top. You don't need to quit loving the game. You need to decide, do I only cheer in the stands, or do I quietly collect at the gate? Check those 3 steps today. Your future self will know exactly which role you chose. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.